So we are starting Chapter 9. Chapter 9 is dealing with a merchandising business organized as a corporation. So that means that we have to do our books a lot different in how we deal with the cost of items. So we have cost of merchandise sold. We are going to have special journals. Before this chapter, we had one journal. Anything we journalized went in the same one. It didn't matter. Now we're going to get into specialized journals, and we're also going to get into specialized ledgers. In 9.1, we talked about our subsidiary ledger, which was accounts receivable, accounts payable. And then we went through, can you pass some markers out? 1, 2. And we talked about how a controlling account stays together. I realized I forgot to count these out. This one has a lot of vocabulary as well. 6, 7, 8. There's 15 of them. 9, 10, 11, 12, 13, 14. I think I need one more. So we're going to take a look at what do we have to do because we are going to order merchandise. Now, merchandise is still an asset because we own it and it has value, but the whole point of merchandise is for us to turn around and sell it. So we're going to take a look at what do we have to do when we buy merchandise, what is the purpose of a special journal, and what do we do when we want to purchase merchandise on an account using this special area here called a purchases journal. Lost my mouse now. Anyone see my mouse? I don't see my mouse. All right, I'm not going to like this. My clicker receiver is missing. Excuse me. A list of assets using containing the value of an individual's item is called inventory. Leon, thank you. And then we have merchandise inventory. Ethan. Merchandise inventory is the inventory that we're going to have on hand to sell to customers. So we have two words here. Inventory is just basically a individual items that is going to be on the list. And then we have merchandise inventory, which are going to be items that we're going to turn around and sell. So, for example, the computers in this room is in inventory for our school. So if they needed to know what happened, they have an asset tag on them and we know what we have. Is the school going to turn around and sell them? No, that's not the purpose of it, right? The purpose of these computers is for us to use. Now, we also have a list in the Thunder Zone for all of our items that we have in stock that we're going to turn around and sell, and that is going to be our merchandise inventory. So they have a different take on that. So now we have how we keep track of inventory. It's going to be called perpetual inventory. Page, please. So perpetual inventory, basically what happens is we have a continuous record of increases and decreases and a balance on hand based on every sale. So at the Thunder Zone, if somebody comes up to you and you sell a lock, when you ring it into the point of sale system, it automatically decreases the merchandise inventory from locks. Let's say we had 50 to 49. Every time you sell one, it decreases the value. You don't have to go in and automatically change it. Some types of computer systems, you would have to do that if they don't have an exact number in there. And going through and knowing your current balance on hand for your inventory is going to help you in a business to make sure you have enough items on hand to sell. So we also have an option called periodic inventory. Mackenzie? So periodic inventory is where we just go through at the end of the fiscal period and you go through and count them. In order to do periodic inventory, you have to go through and do something called physical inventory. Physical inventory is where you actually go and count each item that you have. Now, at the store, we do our physical inventory count twice. We do once at the middle of the semester, which we have to get going, but we're having a computer system problem, so we can't get that going. We go through and count because we need to make sure that what we have on hand actually matches what's in the computer system. Now, you may have seen different businesses when they do what is called physical inventory. They hire people to come into the business and they go through and actually count how much they have. I've seen it done at Kohl's before because they actually have tags on their rack saying counted or not counted, and then they will go through and they hire a company to count. This is how many shirts we have in this style. This is what we have there. And they will go through and say, this is a display item. Don't count this towards inventory. Now, when we think about that, we have to do physical inventory because we have to deal with theft or loss. Now, what would be the difference between theft or loss? They're not the same thing. I'll give you that. What do you think? Yep. Mm-hmm. Can't find it. Or maybe it got damaged and you can't sell it. So here's my example. Let's say my youngest, Forrest, loves pickles. Man, he's a pickle fiend. Dill pickles are his jam. And there's a certain jar of pickles that he loves the most. And when he was a little kid, he'd go in the grocery store and he'd see that jar of pickles and he'd be like, "Look, Mom!" And what do you think he might have done? Could have dropped it. Okay. Now, can the grocery store sell that jar of pickles? No. And it's not going to be deducted from their inventory. They're going to go through and they're going to get cleaned up. Most of the time, they're not going to charge me as a customer because they realize it's an accident, but that's going to be an example of a loss. The other thing is, a while back, there was Kohl's in Green Bay had a problem with their ceiling leaking. Now, if their ceiling leaked, what do you think happened to their items of merchandise they had below where the ceiling leaked? Got wet. Can they sell them? No. So things like that are going to happen in a business. So by doing your physical inventory and counting, it allows you to be able to deal with that. So now we have cost of merchandise. Thank you, Morgan. Cost of merchandise is the amount that a business pays for its goods that it's going to, excuse me, that was really gross. Sorry, sell. That's going to be recorded in the video, so someone's going to enjoy that one. So when I turn around, if I am going to sell these clips, if I sell it for 50 cents, what does my cost have to be? If I sell these to my customers for 50 cents, what does my cost have to be? Less than 50 cents, right? Why? I'm not going to make money. Now, you also have to realize in a business has to pay for lights, right? We have to pay for the utilities. We have to pay for the snowplow removal. We have to pay out for all of those different things. So we also are going to, in this unit, we're going to deal with employees because it's really hard for a merchandising business to be open if you don't have employees. You can't have one person running everything and the business would be maintained. So you're going to have to add some of those costs on there. So you are going to have to realize that the cost that you buy items has to be less than what you turn around and sell them for. So a requisition. Who's going to do that one for me? Thank you. A requisition is going to be from the purchase of merchandise. So it's a form that's going to be done that you go through and you say, hey, I want to order these items, okay? And then we have a purchase order. We on? Purchase order is a request that a vendor to sell merchandise to a business. So we know vendor is going to mean accounts payable. And they're always going to start with the 2 for account number because that's going to be a liability. So in order for us to go through and order and buy merchandise, we have to go through in a requisition. I'm going to go ahead and send out saying, hey, I want to order this. And whoever I order it from is going to send me back a purchase order saying, this is what you are trying to purchase from them. And that's going to be what I enter into the books, because when I go through and do this, I need to, at the time that I order 100 clips, put in the books that I have to pay for this. Because the minute I say I want to buy them, I am now liable. I have to pay for that. So I need it to go in the books as soon as possible that I owe that amount of money. So here's an example of a purchase order. Okay? So when you look at the purchase order, a purchase order means I am buying something. So we are going to be purchasing from Win Lighting, and we're shipping it to 3 Green Products. Okay, so you can see 3 Green Products in there. Purchase from, ship to. Our PO number is 153. We're buying 200 50-watt compact fluorescent lamps. We're buying 150 100-watt compact fluorescent lamps. We're going to go ahead and multiply over, and then we're going to add down. So the total amount that 3 Green Products owes is going to be $1,082.50. You're not going to find a business where someone's going to look at this purchase order and then put it in words, bought merchandise on an account from Win Lighting. You're going to get these types of transactions or actual source documents that we're going to need to do. Now, for Chapter 9, we do have a using source documents assignment that we'll have to complete. It's been a couple chapters since we've done that. So we are going to use a special journal. Who's got that one? Thank you. Okay. A special journal is a journal when we only record one kind of transaction. So today we are going to be learning specifically about a purchases journal. Okay. So these are the special journals that we are going to be learning between Chapter 9 and Chapter 10. Gone is the day where we just record it in a blank journal that records all transactions. Now the first step, when you go to record a journal transaction, you're going to look at the transaction and you have to say, what journal does it go in? After you know what journal it goes into, then you'll record it straight up, okay? So here are 5 journals. Purchases journal, that's when we buy merchandise on an account. That's the only type of transaction that goes in there. If I buy merchandise for cash, it doesn't go in my purchases journal. It's going to go in my cash payments journal. So anytime you have money going out, it's going to go in a cash payments journal. A sales journal is going to be anytime you have a customer that buys on an account from you. That's the only reason that you would do a sales journal. Cash receipts journal is going to be for any time our business receives cash. And then, of course, we have to have a general journal, which is going to catch anything that doesn't fit these type of transactions. For example, if I bought supplies on an account. If I buy supplies on an account, it can't go in purchases. We didn't do a cash payment. It's not a sale on account to customer, and I didn't receive cash. So when I buy supplies on account, it would have to go in my general journal. So our purchases journal, we have what is called a purchases on account. Who will do that one for me? Thank you. So when we take a look at when items are bought now, but you're going to pay later, that's going to be purchased on an account. We're going to put them in what is called a purchases journal. Thank you. So a purchases journal is a special journal where we only record merchandise bought on an account. And then what is special about our special journals is we have what is called a special amount column. Who's got that one? Thank you, Lillian. So that is going to be a journal amount column headed with an account title is called a special amount column. Now, we had special columns in our journal before because we had sales, we had cash payment, and we had cash receipts. Okay, so we are going to find in all of our 5 journals, actually 4 of our journals, we're going to have special amount columns on there too. So this is our purchases journal. Look at this thing of beauty. There's only 1 spot for number. That's it. So, do I need to back up? I got it. Okay. So I love the purchases journal because guess what? You will always get your debits and credits right because there is only 1 column for debits and credits. Now, moving across from left to right, you're going to see right here is going to be where we put a page number. We're going to put our date over here on the left-hand side, and we record our date with our month here. This will be our day of the week, or date. Account credited. Notice it says here account credited, not account title. So we know anything that we write here is going to be credited. Now, moving across, it doesn't say source document, it says purchase number. The only thing that can go in here are purchase invoices. So that would have to be your purchase invoice. Post reference, this is used exactly the same way we did before for posting. And now our number column. Our number column, you will notice that we actually have two account titles up here on the top. We have purchases DR, which stands for purchases debit, and then we have accounts payable CR, which means accounts payable credited. Remember, we have now a controlling account. In our general ledger, we have an account called accounts payable. In our subsidiary ledgers, we have all of our vendors that we deal with, like Don's, okay? So if I'm going to record in this transaction, I'm going to put Don's Quality Market under accounts credited, and then right here I'd put my amount. And I would then post this total separately, okay? So a purchase invoice is going to be an invoice used for source documents for recording purchases on account. Who's got that one? Do I use up all my accounts? Did I need more blank ones? You got one up there? Okay. Terms of sale. Thank you, Kendra. Now, terms of sale is going to be probably the most confusing thing that you are going to see. And I'm going to write an example of a terms for sale over here on the board. Terms for sale, this is a very common one. 2/10 space N30. That stands for 210 net 30. That's how you would read that. What does that mean? That means I get a 2% discount if I pay within 10 days. Otherwise, all of it is due in 30. So, for me, buying items, is it cheaper for me to pay within 10 days? Yes. So as the accounting department looks at these terms of sale, we want to try to take advantage of all of those terms of sale that we can, because that means if the item normally cost me $75, if I pay early, it could cost me $70. Then that makes more money that I could go ahead and generate on that sale. The other thing that you need to be aware of, besides your 210 net 30, has to be what is called their due date. Who can write that one? Thank you, Tanner. So the due date is going to tell you when you need to pay by. So all invoices are going to have that information on there for your due date. So when I take a look here, we're going to see the invoice numbers here. This is a date 11/40. The ship date means it was shipped from Win Lyskang. So the delivery date should be the 6th. Notice here it says N30. So when does this bill have to be paid by? In 30 days. Do we get a discount? No. It's just saying all of this is due in 30 days. We have to pay it by this, December 4th. So all of this information is going to be on here. Notice it marked right here the date that it was received, who received it. The date was the 11/6, and this is going to be document 525. It's really important, and this is one of the things that I work really hard with the Thunder Zone managers, is we have to count everything that we order to make sure that we get what we ordered. It's possible sometimes for us not to receive the correct number, or maybe we thought we were ordering 50 and we only got 47, because that will change our terms and what we need to pay. Now, I will say one company that we have an interesting time dealing with is going to be the one that we get our knit hats and mittens. Have you seen them? They're actually knitted. It says Thunder on the gloves and on the hats with the pom-poms. What we do when we order from that company is they're going to go through and they're going to custom knit all of our hats for us. and we will want to order, let's say, 45 items. They may ship us 47, and here's the reason why. They have the red, the gray, and the white thread on there, and they're going to make as many as they can off of that skein of yarn that's going to knit together. Does it do them any good to have 2 extra left over that says Theme or Thunder? They can't sell it to anyone else. So they put in their clause when you order from them that you may ordering this number, but you may get over or under the amount based on how much yarn they go through. So it is a little bit different for that company. So how do we purchase this on account? This would be what the transaction would read. Purchase merchandise on account from Win Lighting, $1,082. Purchase invoice number 25 or 525. So purchases is going to go up. Purchases is a new account that we have. It is a cost account, and it has a debit normal balance. Okay? So we are adding a new type of classification. Again, it's called a cost account, has a debit normal balance. Cost accounts make our equity go down. Okay, so that's why it has a debit normal balance, just like drawing. It makes it go down because we have to go through and take care of that cost when we turn around to sell our product. Okay, so accounts payable is going to go up by $182. So when we put this in our purchases journal, the date of the 6th, we're putting in Win Lighting, purchase invoice 525, and then one amount. So that's why I like this journal, because it's very straightforward. You don't have to figure out what gets debited, what gets credited. The total for that invoice goes on there. Ready to try this in MindTap? Pass those down for me. I'll get them for you from you in a little bit. So I have Work Together already open. I was trying to be ahead of the game. And we have transactions that we're recording in our purchases journal. So the first thing that we have here is use October of the current year. Journal is a transaction for Golden Fabrics on page 10 of the purchases journal. Purchase invoices are abbreviated as P. No P is needed in the purchase column because in the very top of the column it says purchase number. So the first thing we got to do is get our month in here and our date. We're going to do October 2nd. October 2nd reads, purchase merchandise on an account from Pacific Supply, can't talk, $3,252, P162. Account credited is going to be Pacific Supply. Purchase number, I'm just doing 162. I don't write a P because the heading of this column says purchase number. And then I'm going to go ahead and put in the amount of $3,252. October 7th reads, purchase merchandise on account from Coastal Company, $532. So I'm going to put the date of the 7th. We're purchasing on an account from Coastal Company, so Coastal Company is going to go in my account credited column. Purchase invoice 163, and then it's going to go in for $532. October 11th is my third transaction for page 10. It says purchase merchandise on account from Yeatman Designs, $866 for P164. My account credited is Yeatman Design, Invoice 164 for $866. Now, one of the things I want you to realize when you are looking at your purchase journal, if you are ever missing a number in your purchases journal for your purchase number, that means you've missed a transaction. You can't go from 162 to 165. They are going to be sequentially numbered. So if you ever get to the point where you're missing a number there, that should be a clue to you that you might have missed a transaction putting it in the correct spot. So that is the Work Together. You can go ahead and click on Save and Continue and try that on your own. When you're taking a look at application problem 9-2, which is due tomorrow, I want you to realize with the application problem, you can hit submit. If you don't get it perfect, how many times can you do this assignment? 3. So if you don't get it perfect the first time, should you do it again? If not, it's kind of like throwing your points away because I already gave you information saying, hey, you didn't get full credit. So watch out for those when you have an opportunity to take it 3 times. I hope it doesn't take you very long to complete. I know there's like 5 transactions and it will take you like maybe 5 minutes to complete it, but make sure you get that taken care of. And don't forget to read section 9-3 for tomorrow. This chapter is very, very heavy on the vocab. That's why I'm spending time going through the presentation before we start the application problems.